Can I push it forward a little bit? Because the Fed dots imply, 3 rate hikes in 2019. Does that sound right to you, or is there an upside risk to that forecast, considering the inflation risks, especially if this idea of tariffs as taxes really takes root?
And wages, of course. You know, the August numbers in wages were positive for those who are wage earners. So I would suggest that there is the potential for an upside spike yet again if inflation starts to get some momentum. And I think one of the themes to think about is how is it that we have unemployment rates where they are? Is it the Larry Summers secular stagnation that suggests that people aren't asking the employers for a wage increase, and have employers been able to have people work for longer for less as a consequence of lessons they've learned from the GFC? So I think inflation is something that a lot of investors, bond market investors, equity market investors, will want to look at, because you want to work out, can that inflation be transferred on? What's the policy response to that inflation? And the other thing, Sri, is the risk-free rate. What is the risk-free rate going forward through 2019, 2020, when you try and discount some of the cash flows to momentum stocks that you see so strong at the moment in the equity market? What's the discount rate that we need to apply to some of those indices to say what's the fair value?
OK, and just for the record, Mark, what's the house view at NAB in terms of the quantum of rate hikes that the Fed is going to undertake?
You know, we're still at 3. I think it's the idea that the emphasis on gradual is something that we would say that we think the broader consensus around central banks are saying we will move rates higher, but having spent so much energy and time and money to get us to where we are, there's no need to hurry. So they're prepared to overshoot on the inflation story. And the only point I'm making is if the inflation story is much stronger, you need to just be mindful that they will be adaptive to those dot points to say, look, we need to pull this back in. The other thing to think about is the fiscal stimulus that's been delivered. I think the Fed is pointing to the fact that they don't know how sustainable that is. And so they see a strong economy, but they are looking on the horizon to say, will that sugar leave the system, and therefore do we have to stimulate?
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.